So many unanswered questions. Hello and welcome to the Comstock channel. I'm Joe Camp. Today is the latest tariff deadline day, being that we are now a little bit more than 90 days out from Liberation Day. That was April 2nd when President Trump came out with all of those reciprocal tariffs on so many different countries. Just a few days later, though, pausing them for 3 months for negotiations. Well, here we are already to July 9th. And we're seeing those letters come out already this week, a promise for more to come even this afternoon. So we're monitoring that and looking at how it might influence agricultural markets, looking at the potential outcomes and thinking about what could still come yet the rest of this year, both best cases and worst cases. We're adding another tariff day to the timeline. I've been tracking this, but the list is so long. Let's drill down to some of the key dates. Starting the first day of February, you have these tariffs announced against Canada and Mexico, 25%, an additional 10% on China. Just a few days later, these reciprocal tariffs planned. That was the first time we heard of this type of approach to match what can be these tariffs or non-tariff barriers by other countries. We had March 4th, new 25% tariffs again announced against Canada and Mexico. And again, the new rate doubled against China. April 2nd, that was the Liberation Day we talked about. Just a few days later, all of that paused and then de-escalated. But in the meantime, you've got this different back and forth with other nations. You have Japan mentioned in June. In May, late May, 50% tariffs planned against the European Union. Those tariffs again threatened against Japan, and now coming back into play this week with a letter that put them at 25%. In early July so far, we've had the 25 to 40% letters sent out against 14 countries. And again, more announced on the way yet today. This is going to be something, these new tariffs, that is effective on August 1st. So some opportunity we could potentially see for negotiation with the White House. If we fast forward to where we're at today, again mentioned that we've got more developments yet to come, likely this afternoon. Some of those letters already sent out, more to come, possibly some headway on negotiations. We recently had the trade deal struck with Vietnam, and then talks ongoing last week and this week with Canada and the European Union, although President Trump saying European Union actors are very close to getting their raised tariffs. And to see what that could escalate in terms of market uncertainty is something that's going to continue to dominate this day-to-day trade. It's something that dominated the trade yesterday when we had the 50% tariffs announced against copper, new price highs, biggest ever jump in one day, just a huge surge. Those futures for now backing off and settling down, but still very much elevated on the uncertainty. It's the opposite, of course, for the grains, which we rely on for exports, wondering about retaliation and generally whether or not we're pricing ourselves out of the market just when these grain prices, corn in particular, had really shown competitiveness that had triggered this action by importers, daily sales flashing here or there on a regular basis all of a sudden to indicate some value being sought by buyers abroad. And not only that, but talking about possible bargain buying on a technical front as you have grain futures score new lows, corn below $4, Kansas City wheat poking below $5, soybean futures awfully close to a test of $10, but a fresh recent low here this morning. We start with what's at stake regarding soybeans in China. This is a graphic I updated but included in last week's presentation about the general ongoings of this market because it's so important what we could stand to lose in terms of soybean trade demand if we don't have China coming back to the table yet this summer as they normally would to start booking those new crop fall delivery commitments. We can see the red line, the current year sales pace having flatlined, and knowing that in the blue, the previous year, and in the 5-year average, again, now's the time when normally we're going to see those Chinese importers start to make those purchases for the fall. We haven't had that yet, and we know that so much is riding on these ongoing negotiations. For China, it's been somewhat extended beyond this 90-day pause that the other countries had and are now revisiting here today. But you have until mid-August, but maybe not even before then if these relations deteriorate. Some reports of positive developments with China, that from President Trump, but also threats to the BRICS nations, which include China, that you could have across the board 10% increases here, and yet to be determined how that's going to unfold. We see it, though, still priced into the nervousness across the broader market that we have, for soybeans in particular, a lot to lose. For overall demand, this red line accounted for about 50% so far of total U.S. soybean sales this current marketing year, and that's a total equating to more than 800 million bushels, or well more than double our current carryout estimates. So this is, in one way, the worst case scenario that we can think of for the ag markets, is that China is completely out, that we have a trade war 2.0 or 3.0, 5.0, whatever you want to call it, and that it only goes south from here at a time when, again, we normally have to see that demand start to pick up. The fall harvest down in the south, a late summer harvest, if you will, not long from here. And if you don't have those boats starting to load up for heading to China, that can be a real problem. Of course, something Justin, I know, talked about in the morning Comstock report on the basis front. So take a look at that. We'll invite you again to visit our Comstock report and subscribe, even for a free trial, to look at how we're monitoring these ongoing tariff developments and what they mean for the market. But one of the worst cases is, of course, that we don't have that Chinese demand that we've come to rely on. Also, part of the opportunity at hand, it's not necessarily the worst case that you'd have any lost demand for corn or wheat, for that matter, from China, given that that has all but disappeared over the last two seasons. Before that, though, immediately after the phase one trade deal was inked, while we still had President Trump in office, mind you, there were huge purchases, and it was almost a daily basis in 2020 and leading into 2021 that China was showing up on the flash sale system for purchasing corn. And you can see that in the 5-year average, these huge corn sales to China, of course, now down last year in blue, very much reduced, and then virtually zero here this year in red. China, of course, shows up as a top buyer of many U.S. agricultural products, but they're not the only nation we're worried about. And that's why these latest news developments, whether they're regarding the European Union or some bristling of tensions with Japan, they're so important when you look at the top buyers of U.S. ag products. We have, for corn, Mexico, Japan, Colombia, South Korea, and Spain. This last year's top 5 buyers of U.S. corn. You have China, Mexico, Egypt, Spain, Japan on soybeans. For wheat, Mexico, Japan, Colombia, Indonesia, the Philippines, all of these countries, of course, part of the reciprocal tariffs, and countries that are this week receiving letters and still having, though, some window for negotiations that could still occur before new effective reciprocal tariffs take place on August 1st. Beef and pork, let's not leave those items out. South Korea, Japan, China, Mexico, Taiwan for beef. For pork, Mexico, Japan, South Korea, China, Colombia. You can see the reoccurring countries, Mexico on all 5 of those commodity exports listed. You have Japan on all 5 of those commodity exports listed. Colombia on 3 out of the 5. And so there's a lot still at stake, and not just regarding China, no doubt. And that's obvious, of course, how the market's reacting to these latest developments with the back and forth on Mexico, with the talk again about Japan and what could be a trade deal or what could be a failure to reach consensus, and therefore blocking of a huge source of export demand for U.S. ag products. Again, back to today, we have these various comments made by President Trump. We're tracking Truth Social the best we can and seeing about what he has to say. He commented about there being 7 countries released on new tariff rates this morning, and then an additional round of countries potentially later this afternoon. An example of the letter that President Trump sent to Japan. This is a letter that was basically copied verbatim and sent out to many different countries, in some instances with the tariff rate adjusted slightly. But these are letters that now we wait for a response on. And wait and see, of course, has been the mode for so long now in this market. And it's a cause of uncertainty that has evidently been a source of pressure on this market, no doubt. So again, the tariff timeline takes us to right where we're at to today. Some more breathing room out to August 1st for these reciprocal tariffs and the possibility for negotiations and trade agreements to be struck. But yet again, it's the same story of the unknown and the continued punting of the actual clarification that this market is really starved for. So many unanswered questions, like we started with, on China and soybeans and the dependency there. Let's not forget other dependencies regarding China. If you bring in sorghum, cotton, and pork, those other countries that we mentioned that are so important for agricultural exports, Mexico, Japan, the European Union, and Canada, others that you don't think of as much, like Colombia, Taiwan, the Philippines, South Korea. There's been some back and forth as recently as yesterday. So all of this comes to a head, but then again, doesn't really on this next tariff day that we have to add to the timeline, and then look again ahead towards August 1st. Until then, it's a market that's going to continue to price in the turmoil related to tariffs, and mostly in a negative fashion. The exception being, again, copper. You think about commodities that are imported or exported, and we're monitoring a very fluid situation individually across the commodity space, and for what it means for outside financial markets, the stock market, and how it's pricing in this tariff angst and everything else involving the dollar and gold, you name it. We've got so many markets moving fast in a very fast-moving, developing tariff influence. So thanks for joining me on the Comstock channel for this review of where we're at on the tariff timeline. And in the words of President Trump, thank you for your attention to this matter. Let us know what you think about the situation, whether we're headed to a 2018 trade war all over again. Maybe we're already there, right? Or do we have some hope that we could still avoid disaster at the last minute? That window's closing again for soybeans and for so many other commodities that we'd want to see a source of comfort and confidence in what's ahead for trade export demand that's just not there yet. We're letting you know what we think as we cover this influence on a daily basis, and we're diving more into what I talked about, the best cases, the neutral sort of cases, and the worst cases on price potential and what we should be doing about it. That's all in our Comstock report, the recommendations therein. So I invite you to subscribe, even for a free trial. We've got access available to that here. And we also invite you to like and subscribe this video so you can see what's next.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.